Welcome to the first call of the Revolt week-long free trial. Real quick, we're tapped in from, as you can see, all over the place right now. Calgary, Jamaica, BC, Nigeria, Prince George, British Columbia, Vegas, Nebraska, Minnesota, Australia. Guys, so as you can see, this call right here, it's a lot bigger than the room you're sitting in currently. And I'm honestly just hyped, excited, for this boot camp, this free trial to go down. Just for the people on here who don't know who I am, my name is Blake McLean. I've been a part of Revolt now for around 9 to 10 months. It's crazy to think about that. I've only been here for 9 to 10 months, and just the amount of things that I've learned because of the people with inside Revolt. Not only that, just the people they truly are, the community. It's really just a great vibe. And I've learned a lot in the past 10 months. And so I'm excited for you guys to, receive some of the same value that's taken me from, a position of where I was just a 19, 20-year-old kid, not knowing really what I wanted to do in life. And I was just going to school, most of the time going out partying, drinking, really just doing things that, didn't align with what I wanted truly out of life. And so, because of this community, because of Revolt, GFU, this whole opportunity here, it's really helped me not only become independently profitable inside of the foreign exchange, crypto, stock markets at 20 years old, but I've been in a position now where I can surround myself with people who have the same mindset as me, the same energy, the same motivation and desire to go out there and just do something different to get a different result, which is truly what we're all about here. So, I want to take the spotlight off me, because we have a very, very special guy, that I want to introduce and bring up here. He's going to be the host of the week-long free trial that we're hosting for you guys. And, now's a good time to get out your notepads, get out your pens, piece of paper, because this guy is about to drop massive, massive value that I promise and guarantee you guys, if you take seriously, just like me and some of the other people on this call have, you'll see massive results, not only in your bank account, but in your life as well. Okay. So the person I want to bring up to, really kick this whole thing off, he's our personal in-house trading educator inside of Revolt, and he's also an educator on the GFU platform. So not only does this guy educate and mentor people within the Revolt community, but he's also mentoring and teaching people from around the entire world. Tens of thousands of people are tapping in with Donnie to learn directly from him. He's originally from Canada, and he's been trading, he's been in this whole space for around 7 years now. And he'll probably touch on his story a little bit. But back in the day, he wasn't the Donnie he is today, right? He was going through trials and tribulations, trying to figure out what works, what doesn't, really just trying to figure out life as, a lot of us are trying to figure out as a young kid. And so he really started taking this opportunity seriously and has really established himself as a true leader within Revolt. This guy, obviously, he teaches tens of thousands of people. He's made a buttload of money himself. And the thing I really enjoy and respect about Donnie, though, is that he's a servant leader. And you may be asking yourself, well, what is a servant leader in the first place? Well, it's somebody who's just willing to go out of their way, regardless of who you are, what it is, if it even has any benefit to him whatsoever, and he's willing to help you, right? Because of this guy specifically, I can give a lot of credit back to Donnie because he's somebody who has helped me see the results that I've seen in such a short period of time. And I've, been running up calls with this guy all day. I actually in February got to go on an exclusive leadership trip to Miami and I met Donnie and I got to trade with Donnie live, watch him mark up the charts, see how he literally does everything on a day-to-day basis and directly duplicate it into my own system, into my own life. And so Donnie is somebody who's going to be, giving you guys massive value, teaching you everything you really need to know, just step by step, very clearly for the next week. So really take some insight from this guy. He's somebody you want to learn from, and he's somebody that has massive respect around the world for just what he does, not only in this space, but in life in general. So I want to bring up, our personal in-house trading educator, Mr. Donovan Taylor. My guy, if you were there, would love for you to unmute and kick this thing off. Everybody I know is starving for some value.
Let's go. Let's go. Who's hungry? Who's eager and excited for this week's boot camp? I mean, drop some fire emojis in the chat, blow it up. If you guys are excited and looking forward to this week, which is going to be just absolutely packed with value. And the whole purpose of us doing this thing is to really give you guys the opportunity to become able traders in the market. And what I mean by that, if you look at the definition of the word able, it's having the competence, the know-how, the A to Z process of dabbling in the financial markets, dabbling in the world of trading and investing at a very high level. And so really our goal over the next 5 days of training is to give you guys all the tools, all the resources, and as much value as we can to really get your foot in the door. Because I'll be honest, when I first started trading and investing in, which is crazy. Time flies when you're having fun on the charts, right? 7 years ago, back in April of 2018, the process of me getting involved was not straightforward. It was confusing, it was overwhelming, and I didn't know what I was doing. I didn't know up from down, I didn't know left from right. And so our whole purpose and our whole goal behind this boot camp and this free trial within the Revolt community and you guys being here as guests is to just give you guys what all of us feel is the best step forward in your journey and in your process investing and trading. And a lot of you guys are here completely brand new. Just out of curiosity, let me know in the chat, how long have you been trading for? Drop it in the chat, number of months, number of years. And then for those of you guys that are completely brand new, maybe have zero experience, drop a zero in the chat if you are not currently trading, but you're very excited to be exposed to what this is all about and you're a newbie in the space, and if you're a newbie, that's a very exciting place to be in, especially for this week, because this is the way to really start going about it in the best possible way that you can. So lots of zeros. I'm seeing lots of different responses in the chat. Couple weeks, amazing. Love to see it, Connor. We got half a year now, 5 months, lots of zeros. We love to see it. 2 months, almost a year now. A few months, 4 months, 9, 10 months, 3 years. Okay, we got an OG in here. We got an OG. I see you, Mikey. 2 years. Let's go, Dayton. Love to see it. Guys, I would love to see some more cameras, by the way. If you're in a position to do so, I would love to see your smiling face and your attention dialed in for today's training. I'm going to give you guys all of me over the next 45 minutes to an hour that we're on here during this training. And at the very least, if you could just say hello on camera and show your beautiful face, it'd be great to see you. If you're in a position where you can't put your camera on or you just, feel comfortable with it off, whatever, I get it. But let me tell you something. In trading, you are going to be forced to grow. There is no possible way you are going to see the desirable results that you're looking for if you aren't growing. It's actually impossible for you to get to where you want to go without growth. Think about it. If you want these things, materialistic things, these financial statuses, a certain savings account balance, okay? If you are desiring something that you currently don't have, you are going to need to become someone you currently are not. You are going to need to do different things to get different results. Otherwise, you would already have those things. So if you're the guy or gal who's always on Zoom calls, kind of multitasking, not fully paying attention with the camera off, like nobody can see me on camera, I challenge you to throw your camera on. And of course, it's great to see those of you guys that are smiling and with the camera on. If you're on the toilet, definitely don't turn your camera on. We're not trying to see that. But with that being said, and jokes aside, excited to dive into today's material. And really the topic of today, for those of you guys that saw in the Telegram, free trial Telegram, the whole week is going to be jam-packed with value. We have a schedule kind of laid out. So before I even get into today's topic, I want to just kind of outline what you all have to look forward to for today, tomorrow, and all the way until Friday this week, where we're going to be doing a bunch of trainings. So today, okay, it's going to be all about setting up your trading account and overviewing some of the basics that you absolutely need to have under your belt in terms of foundational understanding to get started in the trading space. We're going to be covering very basic principles today, but principles that are absolutely necessary for you to succeed and for you to clarify what you want in the markets. Because before you get started, you need to know why you're doing this, number one. And number two, you need to have some sort of a goal in mind that you can work towards and reverse engineer how you're going to get there. All right. So you're going to be able to define more of what that looks like after today's call. Tomorrow, we're going to be diving a lot deeper into actually how to go about taking trades and specifically trade ideas, which you guys have access to throughout the duration of this week. We're going to be sharing some different opportunities that you can have the opportunity to kind of take action on. All right, I will say that there's going to be losing trades. That's part of the process, and part of your experience here is going to be, if you want to have the best possible experience here, part of your process is going to be understanding how to use proper risk management, understanding how to go from trade to trade without loss of enthusiasm because the last trade was a losing trade, or without, this energy of euphoria because the last trade was a winning trade. Because these are emotions, these are things that will, in some cases, negatively influence, in a lot of cases, negatively influence your decision-making process in the markets. So that's what you have to look forward to for today and tomorrow. If we go into Wednesday, we're going to be talking about my favorite topic. And this is what I educate thousands of people around the world on a regular basis on. In fact, I'm doing sessions 4 times a week inside the community, on a regular basis, giving ideas, sharing outlooks, doing live trading. This week, obviously, you guys are getting me for 5 days for free, not paying a dime. And it's just because I have such a great big heart. And I just want to be able to, I see it as my responsibility, to be honest. Jokes aside, I see it as a responsibility to pay forward that which I've learned over the past 7 years because I don't want to be the person. This is just me. Maybe you're different. That's okay. You should be different. All right, everybody's different. But for me, I didn't want to be the person that was just making a ton of money from trading. I mean, that's a part of it for sure, but it's not fulfilling to just be a hermit posted up on a private island with the PJs and the, cool, tight inner circle, but not doing anything to give back, not doing anything to pay it forward, not doing anything to, you know, really be, I guess you could say, philanthropic, right? Philanthropic. And so for me, this is like my responsibility. I see it as my responsibility to pay it forward and share with you guys some of the breakthroughs, some of the cognition, some of the things that have really served me well in my trading journey. And what better way than to do a free boot camp like this? But all that to say, Wednesday, we're talking about my favorite topic. And this is something that I go over all the time inside the community and on live sessions, and it's how the banks trade. How to trade like the banks is going to be the topic on Wednesday. It's my favorite session of this week. Okay, they're all going to be good, but I mean, if there was one session you were going to like put an asterisk beside, and you're like, okay, this is definitely not going to be date night. I'm going to make sure I'm there. It's going to have to be Wednesday. That's what I'm going to say. All right, because how the institutions trade and how they are basically navigating the markets is exactly how I teach on the inside. It's how to think like the major institutions, how to think like the banks, because guess what? You've been lied to. Okay. The financial markets are, in fact, manipulated. You've been lied to. They're not just some random, you'll get lucky sometimes on certain trades or investments. This is not the case. There is a science to this stuff, and there are algorithms. I wish I had a Rubik's Cube here. Okay. There are algorithms that if you learn how to follow the footprints that the institutions, the major participants in the markets are leaving, you can start to get profitable and take profitable positions and investments following in the footsteps of the institutions. I mentioned the Rubik's Cube because if you know, the Rubik's Cube, it's like that nine colored faced, cube that you can solve. It's like got all those colors and stuff. Usually I have one on my desk. It's not here right now. Think about it. It's a skill that very, very few people have. I mean, drop a one in the chat if you can solve a Rubik's Cube. Drop a two if you can't solve a Rubik's Cube. Just to kind of put this into perspective here. Stay with me, okay? Drop a two. Give me some participant. Come on. Some participation. Two in the chat if you can't solve a Rubik's Cube. A one in the chat if you can solve a Rubik's Cube. Really? You guys are letting me down. Okay, there we go. Taylor, I see you. Number one. Fire. Okay, so there's a lot of people. All right, Nathaniel, I see you. Okay. So think about it. It's a skill that very few people have. And trading is very similar in two senses. Number one, there's algorithms that are running the markets from these major institutions that are in control of the most money. And if you learn how to observe and identify the algorithm at play in the markets, you can start to solve the Rubik's Cube, so to speak, and play it in alignment with these major banks and institutions. So that's the algorithm side of things. The other side of things is trading is a skill that very, very few people ever learn or have the desire to learn, but it's one of the most beneficial skills. Honestly, it's a life skill. I look at it as a life skill because it teaches you the importance of risk to reward, which is weighing out what's the risk, what's the reward for certain investment opportunities, but also just in regular day-to-day life, it's like, what's the risk to reward of me saying yes and going to this party that is happening that, a whole bunch of people are just going to be getting wasted. It's like, okay, well, the risk is I'm going to wake up feeling like garbage the next day. The reward is, oh, maybe I'll get late. Okay, that's like the thought process you start to have in life with risk to reward and comparing it to other, day-to-day activities outside of just trading. So that's just a funny example. It's kind of a bizarre example, but that's just, I mean, it's how it is. A lot of, especially, I know there's a lot of young folks on this call, but maybe that's how it used to be or how it is for you right now. But it's like, let's start putting our time and energy into things that's going to push us forward, skills that are going to pay the bills, as we say. And then on Thursday, we're going to be talking about AI. We're going to be talking about AI scanners that we have access to that you can take advantage of and that makes the investing and trading process a little bit more seamless. Okay. And then Friday is when we're going to be taking applications. So we have an amazing community. Obviously, we work with hundreds of people all around the world. I educate for thousands, but specifically inside of our community, we have hundreds of people all over the place. You guys saw the, places people are tuned in from on this call. And we're going to be extending the offer for those of you guys that make it all the way to the end of this boot camp. And I would encourage you to just to soak up the training over the next 5 days. But there will be the opportunity for you to apply to be a part of the inner circle community that we have here. So look forward to that. But with that being said, let's dive into the topic of today, which is simple, straightforward, but very important. And the first thing I would encourage you to write in your notes, if you're writing notes right now, and this is a universal principle. Doesn't matter what industry, doesn't matter what business, doesn't matter what it is that you're focused on. You have to master the basics. You have to master the basics. If you want to be a master at anything, you must master the basics. And so today's topic is going to be some of the basics when it comes to trading. And the first thing that I want to bring up and kind of illustrate and highlight on today's call, I'm going to share my screen momentarily here, is the prerequisite that everybody should have gone through at this point if you're seeing this live or in the recording, or maybe you're joining the boot camp a little bit late, this free trial a little bit late, so you haven't had a chance to go over it. It's the free trial fast start. So the the process of going onto the website, the revoltacademy.com/free trial page, and watching the first video, had a nice video of me giving you a quick little rundown of what to expect. And then step one is obviously joining the Telegram, which everybody probably has. Step two is an important one, and this is one that I want to talk about for a second, is setting up your trading account. So whether you are based in the US or you are based anywhere else around the world, there are steps in here, prerequisite steps that you'll want to go through if you haven't already, leaving this call to make sure you are set up for success during the rest of the boot camp. And the first thing that I want to talk about is setting up your MetaTrader 5 account. All right, there are the steps on how to go about doing that in step two. I'm not going to show them to you. You can just go through them in your own time. I'm going to drop this in the chat for you guys. Actually, it's just in the Telegram. Just go and refer to the Telegram. I'll drop the Telegram chat link in the chat just for anybody that's maybe on here and isn't already a part of the free trial Telegram. So you can go and refer to it in there. But make sure that leaving this call, if you haven't already, you've set up an account and you've created a MetaTrader 5 login to be able to start trading. And you can start with a demo account, or you can decide to throw some real funds into an account. If you decide to throw some real funds into an account, right? Maybe you throw up 500 bucks, right? 100 bucks, 200 bucks, 50 bucks, whatever it is. I would encourage you to only take trade ideas and not try to take your own trades until at least the end of this week. Okay. You can take your own trades on a demo account, which is you trading in the real market, but with monopoly money, because then it doesn't matter what happens. It doesn't matter if you're winning. It doesn't matter if you're losing. You're learning on a demo account with your own trades, with your own thought process and ideas starting out. Okay. The secret to success, if there was a secret, if there was a shortcut, it's listening to people that have what you want, have been where you are, and ultimately doing what it is that they did when they started, but also some of what they're doing right now to get to a position that they're in a far shorter period of time. That's the whole point of this boot camp. It's the whole point of this mentorship and everything that we have going on. So I wouldn't encourage anybody to take trades on a live account if you have zero experience and this is your first exposure in the markets. I would encourage you to maybe throw a couple $100 into a live account and just take the trade ideas this week, and you'll see some tangible results on a live account. If you want to just do it on demo, no problem. All right. We always encourage the learning process to take place on a demo account. That way, you're not risking funds that you can't, you're not risking capital that you're maybe attached to or emotionally is because it's your savings, right? Maybe you're pulling from your savings, your checking account, whatever. Demo account trading is the best way to learn. But again, with the trade ideas this week, it's trade ideas from experts, myself, other educators in the community. We're taking some of these same trades that we're sharing with the paid community and giving them to you guys on a silver platter. So yeah, that's the first thing I wanted to touch on. The second thing is really just the basic overview of trading. And I think this is important to cover because I think there's a lot of misconceptions when it comes to the market. The market has misconceptions. Okay. I can make like a whole YouTube video called Market Misconceptions, and it would be a 30-minute long video just debunking all these different things when it comes to trading and investing. Okay. But the thing that I want to go over really quickly, and I'm going to pull this up for you guys, is some of the, again, master the basics. That was something I had you guys write down, right? I told you to write down, whether you did or not, doesn't matter. But be teachable, be coachable, write it down. If it's a nugget of gold, I'll really emphasize it, of course. But there is a slot. I'm going to see if I can find this real quick. I probably should have had this pulled up in advance, just been on calls literally all day. But there's a little over, actually, I think it's on Canva. Hold on. Give me 2 seconds, you guys. There's an overview of something that I want to show you guys that, here we go. We got it. That I think is going to be very significant when it comes to understanding trading at a deeper level. So let me share my screen here. The first thing I want to go over is this. Can you guys drop a 3 in the chat if you can see my screen, full screen here? Are we good? Amazing. Okay. Thank you. Perfect. So two basic principles that we're going to go over right now is number one, how to read a chart, and number two, the difference between trading and investing. So if you're going to take notes, which I would encourage you to do, write those two things down as headers and leave some space so that you can write a few other jot notes underneath. So number one, we're going to focus on is how to read a chart. So we take a look on screen here. Okay, this is currently a currency pair that we are taking a look at. You can see in the top left corner, this is the US dollar against the Canadian dollar. This is an exchange rate. One of the things that we trade on a regular basis are currency exchange rates. You can also trade stocks, you can trade crypto, you can trade commodities like gold, silver, platinum, palladium, corn. You can trade literally corn. It's crazy. You can trade basically anything, to be honest. You can trade in the markets. But the way that we're going to be working through this week's boot camp, we're going to mainly be focused on currencies, so something like US dollar against Canadian dollar, gold, and potentially Bitcoin. And you can trade all of these on MetaTrader 5 once you guys are through that whole fast start process. Now, when it comes to reading a chart, this on screen is a screenshot from a website called tradingview.com. If you're taking notes or maybe you want to write this down and pull this up on your browser or whatever, it's called tradingview.com. It's the best free platform that you can use to look at charts and do analysis and basically have an idea of what to anticipate in the market based on trend and based on different things that you're going to learn throughout this week. So tradingview.com, this is where this screenshot came from. Now, when you're on a trading view chart, this is kind of what it's going to look like. It's going to look like a weird heartbeat monitor, whole lot of maybe confusing things on screen at first. Okay. I promise you, if you just take a deep breath and you stick with me, this is actually really quite simple what you're looking at on screen. But think of trading like learning how to play an instrument. You're learning the basics. It feels a little bit weird at first. You got like this weird posture. If you're playing piano, you're just like your fingers are warming up to it. It's kind of the same thing in trading. You might be like looking at this and be like, oh, this is uncomfortable to look at. And just my heartbeat's, beating faster and this chart's gonna, maybe track my heartbeat or something. It's not the case. Okay. But jokes aside, it might be a little bit weird at first, but promise you, as you go through these sessions and you're sticking with the basics, it's all going to click and it's all going to make sense. So let me walk you guys through what you're looking at on screen here, because I promise this is a lot simpler than it may seem right now. First things first, when you're on TradingView, you're going to see the asset or the currency pair is what we call it because there's two currencies being traded against one another. It's a pair, currency pair. It's going to show you what you're looking at in the top left corner. So right now we're looking at the US dollar versus the Canadian dollar. It's also going to illustrate the time frame that you're looking at. So this is currently the daily time frame, which basically just means that every single one of these weird looking bars, which are called candles or candlesticks, is representing one full day or 24 hours of trading. So that's the first thing. Okay. What are you looking at and what time frame are you looking at it on? In the markets, you have the ability to zoom in or zoom out, as I like to say. So you can be looking on the daily time frame. You can be looking on the 1 hour time frame, which is going to be every one of these green or red bars is going to show you 1 hour of trading. You can look at the weekly chart. You can look at the monthly chart. Okay. You can look at all kinds of different time frames. Excuse me. So with what we have on screen here, you can see that there are green bars and there are red bars. We're going to call them candles because that's what they're actually called, is candles. The green candles are representing a increase in the exchange rate one day to the next. So, for example, we're looking back here, we're seeing a whole bunch of green candles, a few red candles, a little bit of a retracement, a little bit of a pullback in the exchange rate, and we see a huge run up. And then what happens? We kind of find this temporary high. The exchange rate at this time was around $1.46, which means that for every one US dollar you have, it's the equivalent of $1.46 Canadian. So on the right-hand side here, this is the price levels, the value, you could say the exchange rate in this case is going to be shown on the right-hand side here. So, around this high, this is a value of about 145, 146. If we take a look at this low, obviously we saw a pretty big sell-off here, bunch of red candles, red candles. We saw the market move in a bearish direction, is what we call bearish, is when the market's trending lower. Bullish is when the market's trending higher. If you want to write down that little terminology, bullish means the market's trading higher. Bearish means the market's trading lower. If we take a look at this low was set in around $1.25, which means that at this point, this was in May of 2017, the exchange rate was $1.25. So for every one US dollar you had, that was worth about $1.25 Canadian. So far, so good. Down here, the x-axis, if you will, these are the dates. All right, so you can kind of see February, March, April, May. So really all a chart is showing you is the fluctuation of price over time. Here you have the price scale. Here you have the time scale, the dates. So that's all the chart is showing you, just the fluctuation of price over time. Now, what's cool is as traders and using the platforms that we use, you are not limited to making money only when the market goes up. Huge myth busted. Okay. I wish I knew this the first 9 months of trading and investing. Okay. Believe it or not, the first 9 months of me dabbling in the markets, I had no concept or idea of the fact that you could make money when the market was going down. I didn't even know it was a thing. And I was like, man, I wish I knew this. I would have made a lot more money in the last 9 months instead of losing a whole lot of money the last 9 months because I was just buying and holding assets in anticipation of asset appreciation, but the asset wasn't appreciating. So I was actually losing value of my holdings because I didn't know you could make money when the market trails lower. So now we get into the second point here. Okay, first point we just covered was how to read a chart. Very basic overview. All right, these are called candles. You know, the anatomy of a candlestick, we're not going to really dive too deeply into, which is like how to read and understand what the candlestick is showing you. But you know, maybe we'll have time to cover that on another day this week. But it's also, you know, in the basics, more in-depth basics training inside the community, you'll have access to all of that. But the second point I want to get into, that's tip of the iceberg, how to read a chart. The second point is the difference between trading and investing. And this is huge to understand, okay? The difference between, this is actually kind of big text. We'll reduce the text size here. Difference between trading and investing. Okay, write this down in your notes. Investing is you buying and holding an asset longer term. And what I mean by buying and holding an asset, I mean actually buying gold, let's say, physical gold, and holding that physical gold in anticipation of the value of gold going up. As it does, you have an opportunity to go and sell that physical gold for a profit. Investing is the basic principle, the basic concept of you buying and holding something. Maybe it's Bitcoin, maybe it's US dollars. You're acquiring a whole bunch of US dollars to then just hold and in anticipation of asset appreciation. That is what investing is. It's more long term and you're actually acquiring the asset itself. Trading, and this is a really key point. Trading is the opportunity for you to make money in both directions without actually owning the physical asset using these different platforms that we have to basically engage in trading on a regular basis. So instead of you going out there and buying the physical gold to hold on hand, or instead of you going out there and buying a bunch of USD to hold on hand, you can actually trade virtually these exact same things, and it opens up the opportunity for you to make money when the market actually goes down. Investing, you're limited in basically only making money when the market's going up. Does that make sense? If I'm buying and holding an asset, you hear that saying sometimes, buy low and sell high. Investing, you are looking to buy a property, let's say, go and buy a house. And maybe the goal is for you to just live in the house. Okay. It's not really an asset at that point. But let's say you buy a rental property. That's an asset. It's putting money in your pocket on a regular basis. And the idea is for the house to go up in value. Well, as it's going up in value, right? Maybe you bought at 100,000. Probably not in this market, but let's say you did somewhere around the world, okay, $100,000 house. And then maybe your house is worth 150,000. Then you sell your house. Well, you just turned a profit of $50,000. But the only way you could have done that is through investing, acquiring the actual asset and holding it during that asset appreciation over time. Trading is very different. See, we trade, write this down in your notes. We are trading directional contracts. We are trading directional contracts. Now, I don't want to get into all the nitty-gritty details. Because if you're someone who's like very analytical and wants all the nitty-gritty details, you can find them. But for the purpose of keeping this lesson simple and brief, I want you to write that down in your notes for now. We are buying and selling directional contracts, which are representing the asset, but it's not the actual asset itself. It's representing the asset and is, you know, essentially a good representative for that particular asset. So, for example, to keep this again very simple, you have the option of taking trades in MetaTrader 5 using, you know, the account that you set up. You have the option to click buy, you have the option to click sell. You placing a buy states, it's basically a contract that states, I believe price is going to trade higher. I believe the exchange rate of USD CAD, which is the chart we have on screen, is going to trade higher. As it does, you're making money. Similar to investing, but We are trading with something called leverage, which means that you're not kind of sitting on an investment for a long term, a long time to turn a profit in the market. So you're trading with some leverage, and even just a 1 cent fluctuation in a currency pair is a massive, massive move in the way that we look at it with the way we trade using these directional contracts. Now, selling is where you take a position that states, I believe price is going to actually trade lower. Okay. So let's say we're back at this high point in price, $1.45, and we've done some analysis. We've gotten some information and we found something out that states, oh, you know what? I think the US economy is actually going to go to garbage. Okay. Go to crap. So I'm anticipating the US dollar to lose power over the Canadian dollar. I actually think the USD CAD exchange rate is going to drop. So you take a sell position, which is stating, I believe price is going to fall from where we're currently trading. And as the price is in fact trading lower, you're turning a profit in the market. Now you might think to yourself, well, Donnie, how am I going to sell something that I don't own? And how does that really make sense? Well, really, when you're taking a sell, what's happening is you're just buying the Canadian dollar against the US dollar. Whereas when you take a buy on USD CAD, you are buying the US dollar against the Canadian dollar. Now, I know that might be something you have to watch back in the recording to wrap your head around, and the recording we posted after this call. But to basically and simply understand this in the most simple terms, when you take a buy position, you are anticipating the currency exchange rate or the asset's value to increase. As it does, you make money. If you take a sell position at, let's say, a high point in price, you're anticipating the market to trade lower. As it does, you're making money. So, what does this open up in terms of opportunity? Let's stop sharing screens for a second. Think about this. Trading is a way for you to essentially have a recession-proof skill where even during a recession, even during a time where the markets are not doing well, you're in a position where you're actually still winning because you understand, as you're a part of the community, you'll get to understand how the market moves and why the market moves the way that it does. So that even as the dollar, US dollar, has been doing absolutely awful pretty much all year since this whole tariff situation, we've been making a ton as a community selling the US dollar against other currencies. That's a huge, huge, opportunity. If you think about cryptocurrency for a second and something like Bitcoin, maybe you're familiar. I'm sure everybody's heard of Bitcoin now. But maybe you're not familiar, and that's totally fine. There was a season, and in fact, we're in a season right now that crypto and Bitcoin is very bullish. It means it's trading, very positively in the upward direction. There will come a point at the end of this year where that's not the case. Bitcoin will no longer be bullish, and we'll start to see the market plummet. You heard it here first, okay? Just come back to me in 6 months and you'll be like, dang, Donnie was right. The market did stop going up. I thought it was going to go up forever. It's not how the market works, man. It's not how the market works. But at the end of this year, you're going to have the opportunity to take sell positions, purchasing those contracts that state, I believe Bitcoin's price is going to fall from here. And as it does over the next, you know, year from beginning of 2026, you're going to be turning a profit while everybody else is scratching their head saying, man, I should have sold my Bitcoin, investing longer term and not even knowing that trading is an opportunity for you to make money even when the market goes down. So, who's still with me here? Who did I lose? Let's get you have questions in the chat. Questions are encouraged. Okay. But hopefully this made sense, at least to a certain extent so far. Okay. And if you have questions, by all means, feel free to drop them in the chat. There's no dumb question. This is something that's really, it's an important concept, and I think it's something that I would encourage you guys to watch back on the recording just to fully wrap your head around it. Makes enough sense. There we go. That's a good way of putting it, Austin. It's enough sense to move forward. Okay, cool. So let's talk about my favorite topic for today's lesson, which is risk to reward. All right, go to a clean sheet of paper, or if you got room on your page, that's fine. But I would encourage you to go to a clean sheet of paper here for this one. And this is the importance of what we call risk to reward. I talked about it before. I gave a little bit of an example. kind of an out-of-pocket example. We gave an example with like, do I go to the club? Do I go out to that party or do I stay in? Well, let's talk about it in market terms, my favorite terms. Okay. What we have on screen here is two different risk to reward ratios. And this understanding I'm about to give you guys, this cognition that I'm about to give you guys, this breakthrough, this piece of information will completely change probably the perspective you have on the market. Because a lot of people think that trading, investing, the financial markets are a ruthless place and nobody should touch it with a 10-foot pole. A lot of people have this false misconception. The reality is, you can be trading profitably even despite you being wrong more than you're right. You could be wrong 6 out of 10 trades and still be profiting more in a week than you earn at a bank annually. Let's unpack this. Let's dig deeper into this because I'm sure a lot of people are like, whoa, that sounds like a great opportunity. Well, let's talk about it. Okay. First things first, risk to reward. As a trader, because you guys are becoming traders, you are going to be an able trader after this week, at least for some of the basics. We're giving you guys a little tip of the iceberg this week. Okay. You are predetermining exactly what you're risking every single trade and exactly what you are looking to take as a profit every single trade. As a professional trader, that's what you should be doing. What you don't want to do is enter a trade and be like, "Oh, I hope this goes up forever," or "I hope this goes down," and you never actually define, okay, if it doesn't, when do I get out? All right, as a trader, write this down in your notes. You want to always have what we call a stop loss, and you always want to have what is called a take profit. Very important. Very important. If you just understand that point, you're already better than the vast majority of traders in the market, to be honest, because most traders fail because they don't have this information, they don't have this education that we're delivering this week. This is why we're doing this because it's like, yo, we want to see you guys win. So, what is a stop loss? What is a take profit? These are parameters that you are choosing prior to entering your trade. Now, what's nice about it is, let's say you decide to risk 1% of your capital on a position. So maybe you're trading with $1,000 account. You decide to risk $10 on a trade. What you're stating to yourself essentially is, hey, here's current price. If we trade higher in the direction that I'm anticipating price to go and we reach my target, which is your take profit, what'll happen is whether you're on your phone, whether you're on your computer, whether you're on the toilet, whether you're on a date, whatever the case is, in school, at work, you don't have to be there for the trade to automatically close at a profit favorably in your direction. Okay, a take profit is what is going to take you out of the market in a winning position in profit once your trade completes. Okay. A stop loss is the same thing, vice versa. This is what is basically your safety net on the trade. So, should you be wrong, which you will be wrong as a trader in the market, it's inevitable. Nobody has a 100% win rate. Let's say the market trades lower and I was anticipating the market to trade higher. Well, instead of this thing just continuing to fall off a cliff and me just losing a ton of money, I am predetermining my risk to be no more than what I've set prior to taking that trade. That is what a stop loss is. That is what a take profit is. Okay, your stop loss is your safety net. That basically is a parameter. It's a number. It'll depend on what it is that you're trading. But let's say, you buy, I don't know, let's say you buy something at $10, okay? And then your stop loss is, if price trades to $5, I want to be closed out of that trade, losing 1% of my capital. Okay, because your trade size is what's going to determine how much you're risking on the trade, not the actual exchange in the price. Okay, you can pre-calculate this. We show you guys how to pre-calculate this in the future. The take profit might be, hey, if we trade to $15, I want to close out of that trade. I want it to be closed automatically, paying me that 1% that I'm looking to gain on that position. So understand this. As a trader, you are in a position where you have control in exactly what you're risking and exactly what you're looking to make on every single trade. So now we'll talk about the difference between example number one and example number two. Okay. And again, when you take a trade, you don't have to be glued to your computer screen, glued to your phone screen. You can literally set and forget your trades. As long as you've set your take profit and your stop loss, these two things, you can go about your business. You can be at work. We have a lot of people actually in this call that are already a part of the community that are already trading. And just out of curiosity, like how many of you guys have made money while at work from a trade before? Just out of curiosity, drop a two in the chat. Okay. Just out of curiosity, you guys let me know in the chat if you've experienced that before. Okay. One or two in the chat. I think I said two, but you guys are dropping ones. The way people are able to do this is you set it and forget it. You set these parameters, you go about your business, go back to work, whatever, and the trade will just do what it's going to do. You've already set exactly what you're looking to risk on the trade. So even if the trade goes against you, you're losing no more than what you've risked. And you've also set your take profit, which is if the market goes my way, I want it to automatically close me out in profit. Now, example number one and example number two. There is no right or wrong way, but there's a preferable way of navigating what we call risk to reward ratios. Okay, R&R, risk to reward. So example number one, let's focus on it for a second. Just as an example, let's say that you took 10 trades in a week. Okay. And I would encourage you guys to like write out this example in your notes just to really integrate this information, not so that you can, go back to it and reread your notes. Because let's be honest, a lot of people don't reread their notes. It's just the act of physically writing notes will allow you to better integrate information. So it's not a matter of, you can go back and review your notes. I would encourage you to, but most people don't. It's just to really integrate what you're learning. But this on screen, let's say you took 10 trades in a week, okay? And we're talking about being profitable. Obviously, we want to be profitable if we're trading. That's the whole goal. How can we set up the rules to always win? Well, with example one, you have to be winning more than you're losing to be profitable because you're risking 1% to make 1%. You're risking $10 to make $10 on your $1,000 trading account. Okay, so for you to win four trades of the 10 and lose the other six, you're going to be down 2%. You're going to be down 20 bucks at the end of the week. Okay, it's not really ideal. Example two, however, the same scenario with 10 trades, four wins, six losses, the outcome is entirely different. And this is what I was talking about when I said that when you really integrate and understand what's possible in the markets, you can be losing more than you're winning and still netting a profit greater in just 1 week than what you make in an entire year at a bank being paid to your savings account in terms of interest. Let's look at this example. 10 trades in a week, four wins, six losses. With example number two, you have what we call a positive risk to reward ratio. Okay, this is a 1 to 3 risk to reward ratio, a positive risk to reward ratio, which basically means that you're risking $10 on the trade or 1% of a $1,000 account, just as an example, and you're looking to target a 3% reward or 3% take profit, $30. So you're risking $10 to make $30. You're risking $1,000 to make $3,000, right? 1% to make 3%, whatever it is that you decide to risk on a trade. So even though you were wrong 60% of the time, right? Six trades lost, 4 won from 10 trades in a week, you're still netting a profit of 6% at the end of that week. You're still netting a profit of 6R is what we call it at the end of the week, which is R just is what you define as your risk. That's powerful. Okay. If you guys really understand what I just went over, that is a huge paradigm shift because you do not need to be right more than you're wrong to make money in the markets, period. In fact, you might only need to be right once. I mean, there have been people inside the community that have hit 1 to 10 risk to reward ratios where they're risking 1% to make 10% on a single trade. They could be right once in an entire week and be wrong the other 8 times and still be netting a profit of 2% at the end of the week. So, a huge misconception is in life in general, a huge misconception is that people say, oh, you should be right more than you're wrong, or this or that. It's not about being right all the time. It's only about being right once. Or in trading, you don't need to be right all the time. You can be right, some of the time and still be very profitable, make a full-time career or even just a part-time side hustle income doing this thing. So this is really the some of the basic material I wanted to cover today. And obviously, 1 to 3 is a good rule of thumb as a bare minimum. I want to say that for those of you guys that are on this call, a good starting place could be 1 to 2 risk to reward, 1 to 3 risk to reward. 1 to 2 for me is a bare minimum. 1 to 3 is usually what I'm looking for trade over trade because that way I know I could lose 4 or 5 trades in a row, win two, and be back up in profit. That is a huge, huge, I guess you could say, power that I'm allowing and giving to myself in understanding risk to reward. And by the way, for the record, I always joke about this. If you know, you know. If you don't know, you're about to know. But what other career can you literally suck so bad to the point of being wrong more than you're right and keep that job? Other than the weatherman, what other career can you be wrong more than you're right and keep your job? Like if you're a brain surgeon and you go into brain surgery, or well, you don't go into brain surgery, but you go into giving somebody brain surgery and you mess up, that person's gone. Like you're toast. You're fired on the spot. You can't. That's just you're gone. There's no ifs, ands, or buts about it. Trading, you can literally be rewarded for being wrong more than you're right, understanding risk to reward, and still be profitable. I mean, 6% in a week, as an example, which is honestly not crazy. Like if you think that's crazy right now, I'm excited for you because if you think 6% in a week is crazy, I mean, it's good. I mean, it's not. It's a good. That's a good return. But that is not crazy. And you'll see as you continue learning from, this week's lessons and also just getting more immersed in the trading space, you'll see that some of the top traders are doing, incredible numbers in comparison to 6% a week. But even just as a starting point, what do you make at your bank with a high interest e-savings account? Maybe 4% a year. Even if you're making 6% a month trading, that's a huge increase in your income. That's a huge increase in your return on the capital you might be trading with. So let me just pull up my notes here because there's another couple of things I wanted to go over in an effort to be mindful of time. I think we're going to go into this a little bit more in depth tomorrow with the really understanding taking trade ideas, taking trades independently. We'll talk a bit more and give you guys a visual demonstration of setting a stop loss, a take profit, what is a pip, lot sizes, which is another point that I want to get to tomorrow. But this is, I think, a good starting point for the boot camp and a good place to really wrap up today's session is just what we've covered so far. And I think that, even just the principles that we talked about today are really something to sit on, really ruminate is a great word, ruminate on what we talked about today. Because ruminate, for those guys that don't know, it's just to think deeply, to roll over in your mind a number of different ways and a number of different times on a certain concept. That's what the word ruminate means. But think about what we talked about today. Think about the ability and the power that you have to make money in both directions. Think about the ability and the power that you have to set up the rules with your trading plan to risk 1 to 3 every trade, 1% to make 3%, $1 to make $3, $10 to make $30. That is a very powerful concept in and of itself. And so, in conclusion, if you haven't already, this is going to be important, especially in the event that we have trade ideas coming out before our next trading call, which is quite likely, which will be tomorrow night when we have the next training. In the Telegram chat, there is a video. I'm going to drop this in the Zoom chat here for you guys. There is a video overviewing exactly how to take a trade idea using MetaTrader 5. So once you've finished going through the fast start and setting up your trading account and setting up your MT5, for when a trade idea does come out, this video that I just dropped in the chat will support you in understanding exactly how to take that trade idea on your demo account, on your live account. And notice this, I want to pull this up real quick. Notice how anytime this is the video, by the way, it's in the pinned messages. It's the first pinned message. So if you're seeing this on the recording, go to the Telegram chat. First pinned message is this one right here. The other one is this right here. Okay, these are the two pinned messages, the very first messages in this channel. And this is a MetaTrader 5 tutorial on how to take a trade idea. So quick video, short and sweet, watch that just to be ready to actually take some trades on your demo account or on your live account this week. Again, if you're using live funds, just take the trade ideas for this week, okay? And another point that I'll mention is that any trade that we do share, there will be this little message at the bottom of the idea. So for example, there was this idea on gold earlier today. Notice how it says 0.01 lot size per $100. This is what's going to allow you to be using proper risk management. If it was 0.02 lot size per $100, that's a slightly bigger lot size position. Now, if you're thinking, okay, Donnie, I don't even know what a lot size is yet. It's because we didn't talk about it today. We're going to talk about it more tomorrow, but just to kind of take this a step further. Okay, your lot size is what is going to determine how much each minor fluctuation in the market is worth for you. So for example, on screen, okay, this number right here on your MetaTrader 5 is your lot size. Okay, this number right here is your lot size on MetaTrader 5. I'm going to zoom into it. Okay, when you're on this trade window, oh, am I on the wrong screen? Ah, thank you. Appreciate you for that. You guys can see this now? Appreciate you, Blake. Okay, perfect. This is what your lot size will look like when you're on the trade window on your MetaTrader 5. Okay. So this number, you don't have to know too much about it right now because we're going to go over it tomorrow in more depth. But just in the event that there's a trade idea between now and then, because there probably will be, this is what is called your lot size. So all you need to know is this is your lot size. You can adjust this, you can increase it, you can decrease it, you can put whatever number in there you'd like. But the bottom line is for risk management, use the rule of thumb that we drop in the trade idea message, which is, for example, on this one right here, right? New trade idea, sell. It gives you the exact asset that we're taking a trade on. So this is a gold sell from earlier today. We were anticipating the price of gold to fall and trade lower. It'll give you this rule of thumb. Every trade, this might differ from one trade to the next. 0.01 lot size per $100. So if I'm trading with $1,000 account, I'm going to want to take this in proportion. So it'd be a 0.10 lot size. And again, the actual, finer details of understanding what a lot size is and, pips and all that stuff, we're going to talk about tomorrow. But just at a glance, this is your lot size. So adjust this according to what balance you have in your trading account, what dollar amount in balance, or maybe you're trading with 500 bucks, 1,000 bucks, whatever. Okay, you're going to want to adjust this number, this lot size, in accordance with the message we drop along with that trade idea. We're doing the risk management calculating for you, basically, with the trade ideas we send out. So just wanted to cover that. But guys, hopefully you got some good value on today's session. And if you did, hey, this is a free boot camp that you're more than welcome to share with whoever you'd like. I mean, if you had some light bulb moments, if you just enjoyed the value, the lesson for today, there was a couple of things I wanted to get to that we didn't, so we'll bring it into tomorrow's lesson. But feel free to, share this thing. You can share the Telegram. Anybody's welcome to join. There's no sort of, restriction. Like this is a completely free boot camp, and we want to get this out to as many people as possible, to be honest, because this is information that I wish I had when I first started, not knowing a thing, not knowing left from right, up from down. So I'm going to end the recording here. If you're on the recording, looking forward to seeing you on tomorrow's session or on the next session.